South Africans will probably remember March for the 10 consecutive days of power cuts. Pessimism peaked when Public Enterprises Minister Pravin Gordhan suggested that staff were still getting to the bottom of the issues Eskom was facing. And this fed through into the stock markets. Stocks most exposed to South African consumers bore the brunt of this pessimism. Banks were among the worst performers. Absa and Nedbank were down 16% and 12% respectively, while retailer Mr. Price fell 12% in March. Despite the local power challenges, the rand took most of its direction from global events. It ended the month down 2.9%, actually better than the currencies of Argentina, Brazil, Turkey, and Chile. The capped Swix index ended March down only 0.2%. Rand hedges helped to offset the dismal performance of locally exposed shares. The biggest positive contributors for the month were Naspers, as Tencent was up again in March, and then the mining companies. Earnings estimates for the miners continued to be upgraded to factor in higher commodity prices. Now, the worst performer in the top 40 was Aspen. Aspen fell 30% the day after it announced results. Those results showed that its mounting debt is growing faster than operational cash flows. The South African Reserve Bank met at the end of March and held rates steady, which was in line with expectations. We also had Moody's, which chose to not issue a statement on the stability of South Africa's debt rating, effectively keeping it stable. South African bond yields strengthened by about 10 basis points in March, although they essentially lost ground to their developed market peers. To give some context to that, the US 10-year bond yield strengthened by about 30 basis points.